As we announced, the Bank of Canada, or brought to you, Bank of Canada announced it's holding its key benchmark rate at 1%. And we want to now talk about what that could mean for the mortgage market. Samantha Brookes is the CEO of Mortgages of Canada, kind enough to join us here in studio. Nice to see you.
Thank you.
So we've talked about what's happening with the Canadian dollar. We've talked about what's happening in the bond market. But let's talk about mortgages, because quite frankly, the housing market seemed to factor into this Bank of Canada decision. First of all, what had been happening after we saw not one but two rate hikes starting in July and then into September by the Bank of Canada? What was that doing in the mortgage market over the last few months?
Over the last few months, we've been seeing a cooling of the market, and consumers' confidence had pretty much gone out the window. As you've heard, I'm sure, that the real estate market has been softening. And so we've just been monitoring everything month by month to make sure that whoever's looking for a mortgage right now, that it's not going to really affect them if we extend amortizations, just making sure everyone fits right into where they're supposed to be.
Interesting. So just to read what we heard from the Bank of Canada today, they said housing forecast to slow in light of some of the policy changes affecting housing markets and higher interest rates. I was careful how they word that. They're basically saying housing might slow because of us and because of some of the other policy moves that we've seen. Let's talk about some of those other policy moves. I mean, obviously, the head banking regulator in this country recently came out. They said they were going to be tougher on basically, like a stress test around people who were putting down at least 20% on their house. I almost felt like we were going to maybe see a rush of people trying to deal with their mortgages before the end of the year. Have you been seeing evidence of that?
Yes, we have been. Just in the last week alone, we've had numerous clients contact us, not just on our own books, but people just calling to find out, how is this going to affect them? Should they be renewing right now? A lot of them are actually self-employed, and they just want to know how they're going to be able to renew their mortgage, if they're able to break their mortgage right now, what their penalties are looking like. So basically we just advise them, if you're on a variable rate and you're not feeling comfortable, then perhaps it is the right time for you to think about locking in. However, if you're okay with the variable and you're okay with this new stress test, then you can stay where you are. It should be okay.
So it does sound, we had one economist on earlier who suggested after this two rate increases that we've seen from the Bank of Canada, that maybe, based on what they're telling us today, depending on how the economy plays out, they might have to reverse course on that. So I would assume that anyone who is stressing out about mortgage payments being something that might not be easily handled as a result of rates going up, maybe has a minute to look at the situation and say, oh, maybe rates aren't going up for the foreseeable future as a result of what we learned today.
Right. So anything is possible with the Bank of Canada, as we already know. I know they're going to be more cautious with any type of increase that we're going to see over the next, I would say, 6 months. And everything is going to be very data dependent over the next 6 months too as well. So we're just anticipating that they're not going to be making any moves based on the current state of the economy and how low the inflation rate. We'll just have to wait and see what's going to happen.
So I guess this idea of getting pre-approved, guaranteeing fixed rates, because you can do that for like 120 days, or how does that work?
Yeah, so getting a pre-approval ahead of time makes sense, especially if you're going to be doing it in December. So it's anywhere from 90 to 120 days. The only thing I just want to advise anyone who's looking to do that is to just be mindful of the dates, because banks have they sometimes will change the policies ahead of time just to accommodate the government's rule changes.
I guess one of the key concerns beyond just being able to get to your mortgage payment is just completely throwing in the towel, right? This idea of delinquency rates, would those go up? Let's face it, we're a nation of debt lovers now. Anecdotally, have you been hearing stories of people who have said because of what's been happening, literally they're not going to be able to meet their mortgage payments?
Well, that is the chatter right now. We'd have to wait to see. There are some people right now that obviously cannot afford their mortgage with all the debts that they have racked up over the last couple of years. With the new stress test, because of the limitations and how high the interest rate they have to qualify on, they will be put into a much riskier situation where they would have to move on to the alternative side and possibly even to private lending too as well, just to make those numbers work for them.
All right, Samantha, always good to get your take. Thanks for joining us. Samantha Brookes, CEO of Mortgages of Canada, joining us with the mortgage perspective on today's news from the Bank of Canada.